The most common questions I get asked every single week is, should I be looking at brand new or existing property?
So, Benny, I'm going to take a stab in the dark and say that you align more so with brand new property because it makes up the majority of your property portfolio. So, what is it that you love so much about building brand new?
Just even you saying that, I'm like, oh yeah, my portfolio is pretty much new now. And the main reason is I'm just sick of maintenance.
Yeah.
After investing for the last 13 years, brand new is just so much easier. There's significantly less maintenance, which I love. But on top of that, because it's brand new, you generally do get high quality tenants that are generally earning more money, which means less risk for me as an investor. And because it's brand new, the rent returns are very, very strong. I think I've also moved to brand new a little bit because I like being involved with my wife being an interior designer in the design and construction process. So I think one of the major benefits that's often overlooked with brand new is you can design it for the modern family or the specific suburb that you're trying to target. So I like the open dining, kitchen, living al fresco onto the backyard concept. I like to have oversized master bedroom, a second study or kids retreat. And I like to have large bathrooms as well as bedrooms in the places. And then on top of that, I think you can get very, very creative with the finishes, the fixtures, and, for a tiny bit more extra money, create something that is very custom, very unique and very suited to the market.
It all sounds pretty rosy so far, but obviously, there's always going to be cons to the pros. And what are some of the negatives associated with building brand new?
So the biggest negative to me now, and that's why I'm not doing so much brand new at the moment personally, is it's just so expensive, man. By the time the developer, the builder, the guy selling the land and everybody along the way gets their cut, the price of building in Australia, because there's not a huge amount of quality, well-located land at the moment, is just through the roof. On top of that, builders are going bankrupt. The price of building, as labour has increased and materials have increased in value, has gone up significantly. The price of building in the last couple of years or the last 3 years has gone up by as much as 20 to 50% in most locations. And that on top of the labour rates and the supply issues that these builders are having, as well as unfortunately some of these guys going bankrupt, just means it's a little bit dangerous at the moment in the current market for me to really pursue it as a viable strategy. On top of that, most brand new stuff in Australia is in greenfield sites, which you and I don't like.
To me, property investing is all about buying in the best location that you can possibly afford, as close to the city or as close to the beach as you can get. And most of these areas in the big capital cities have already been developed. So you're going further out west, further inland for a lot of these greenfield sites. And what I don't really like about it is it's the houses that come first, then the infrastructure and the amenities follow, like public transport options, shops, cafes, restaurants, all of these things that are actually going to make a suburb worth living in. So just got to be really careful. And unfortunately, I've talked to a lot of people that have gone down the path of buying a house and land package in regional Australia or right on the outskirts of some of the big metro markets. And, they haven't been able to generate the returns from that investment that they were sold to in the beginning. So it just comes back to doing as much due diligence as you possibly can and ensuring you're buying an investment that's going to get you from where you are today to where you want to be in the future.
So they're the pros and cons of building brand new, but we obviously are huge fans personally and as a business with buying the highest quality existing property. So what are some of the pros of getting an established home?
Now, I might be a little bit biased towards existing because my entire investment property portfolio is made up of established properties in established locations. And the reason that I went down that path is for some of the factors why I like existing and the fact it's ready to go straight away. As soon as you settle on that property, it's in your control. You can get some tenants in there right away, contributing to the mortgage. Now, when you look at the reality of the Australian property market, about 99% of the properties available online are established properties as well. So you've got a much bigger sample size. You've got much more supply to choose from, which helps when you've got budget constraints, when you've got specific property investment goals that you're looking to work towards achieving. So I like the fact that you've got much more supply to choose from. But for me, these three pros are the reason that I buy established properties. And that's the fact that you're buying in better locations, You can buy in these established areas where you've already got amazing schools, established schools. You've got good public transport options. You can buy super close to the CBD or really close to the water, whether it be a beach, a bay, or a river. You know, those areas are the most sought after locations for Australians to live in. You know, the next one is your ability to add value. When you're building a brand new property, it is what it is. You don't really have much potential to add value. Where if you're buying an established home, there is so many options. You can do a minor cosmetic renovation. You could go to a larger structural renovation where you're adding bedrooms and bathrooms. You could do what I'm planning on doing, like a knockdown rebuild strategy where you buy the worst house on the best street and then turn it into hopefully the best house on the best street. And you may even have the chance to do like a small development, like a house in Granny Flat, or even potentially a larger development like a subdivision. And then a huge pro for me is the fact that you're going to be able to acquire a larger portion of land, because the established locations, they were developed a long time ago where the average square meterage of the land was a lot bigger. Now we know that the power is in the land, and it's the land that rises in value, not what's sitting on top of it. So as a property investor, you want to buy and you want to acquire as much land as you possibly can.
You know, obviously with the established and older homes, there's some negatives that come off the back of it. Some of the ones that I'm currently experiencing in my own portfolio is, like I said before, maintenance, renovations, and having to put a little bit more money into them. Obviously, because they're older, they require more upkeep and more looking after. What are some of the other negatives from your perspective?
Look, the maintenance is a killer. You know, for me, I bought really unrenovated properties, and, you know, I'm constantly being dealt with those maintenance bills, you know, new hot water systems, new air conditioning units, new locks, new gutters, all of these painful things to deal with. But fortunately, you know, capital growth has outweighed that maintenance, but it is a huge item and can be challenging for a lot of people to deal with. And the reality is these houses were built a long time ago, and the floor plans are a lot smaller. They're a lot more pokey and less livable than a newer home, which sometimes means you don't get the best quality tenants and you don't get as good a rental return as you would if the property was newer. And one of the other things is just the fact that there's really no tax benefits from established properties. The depreciation isn't really there, or if it is, it's very, very minimal, and it doesn't really have a huge impact on the cash flow for the property. So you're not going to be able to use those tax depreciation benefits as well with an established property.
You know, when it comes to investing, at the core of it, Simon and I both believe in acquiring quality assets. So this means close to the city or the beach in Australia's metro markets, in quality suburbs with great infrastructure, in quiet streets with good quality housing that hopefully you can add some form of value to over the longer term.
If you're listening to this and seriously considering buying a new investment property this year, and you're not sure whether to build a brand new investment or buy an established investment property, then we would love to offer you a free one-on-one strategy session. So if you'd like to book one of those strategy sessions, then head over to our website, www.pumpedonproperty.com, and follow the free strategy session links where you can book in a call with myself, Simon, or my brother, Ben, where we're going to talk about where you're at right now and where you want to be in the future. We can talk about the pros and cons associated with buying a brand new property versus buying an established property. And then you can take that information and go and smash it on your own, or you can become one of the small number of clients that we work with each month. Either way, guys, we just wish you the best of luck and want you to generate the best return on your investment if you're thinking about becoming a property investor.
Woo!
That's a wrap.
That's a wrap.
Getting cool, bro. Yeah.
Oh, sweaty. So sweaty. Oh, that's good. That's so nice, eh? Oh.